Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat and UK London feed wheat. I'll start with Paris milling wheat. It is stating the obvious here, as elsewhere in the grains, that the market had moved sideways to lower from early July until mid-August. The problem here in Paris milling wheat compared to the other grain markets had been that we had two competing patterns vying for the market's attention. The first was a July to September triangle come wedge pattern pointing lower, enough to be considered a wedge but not completely out of the triangle class. The second pattern was a late July to early September bear channel. In practice, discussing this became immaterial, as we saw the market reach the primary and secondary targets for the triangle as well as the target for the bull channel, and all had been exceeded. In this whole vying process, the market here, as elsewhere, constructed a new pattern. It built a mid-August to mid-October ascending wedge pattern, currently 368 to 377. That's the one that's highlighted in blue on my daily chart. 4 weeks ago, prices dropped out of this ascending wedge pattern and pushed down through both the medium moving average, currently at 333, and the long moving average, currently 345. And this week, down through the short medium moving average, currently 339. We are now below all the moving averages. By doing this, the market is negating what might have been supportive actions, supporting actions that are still live in other weak markets. So there were, I say were, as one avenue is almost tightly sealed closed now, there were two avenues for this market, though I am sure others will eventually become available. The first still is live, is the straightforward move down from the appropriate potential targets for the ascending wedge pattern. Thus the primary target on the downside is in the 331 zone, whilst the secondary harder to reach target X1 is down in the 296 zone. Then there is the second avenue, the avenue that's almost closed as an avenue. It is the whole of the July to day action being not just a loose type of V-bottom, but a loose type of V-bottom with an extension. These extensions have something like a bull flag within them. Personally, I've always found this idea here a little slack as a pattern, even as a possible bullish halfway hesitation. It is all pretty much depending on the short medium moving average still managing to hold the market up despite the testing. If we did see prices revert back up, and remember we're through below the short medium moving average, if we did see prices revert back up, well then this second scenario, the loose type of V bottom with an extension, suddenly looks a lot more interesting. So this brings me to this week's action. Prices dropped below all the moving averages and have already reached the primary target X in the 331 area. This action has, as I previously said, almost killed off the idea of a V-bottom with an extension, but it has opened the way for another possible pattern. It is to look at the recent action since August as a possible double top. It is a lopsided double top, admittedly, and there are elements which I'm not entirely happy with, but it could just be a possible double top. This pattern is not available in the other grain markets, so one must treat it as either a leader or an aberration. Hence, we may have a third way here. If this is the case, then a possible primary target X3 for this pattern will be not too far below in the 321.5 zone, and a secondary harder to reach possible target X4 would be in the 306 even zone. It is now up to the market as to whether it wishes to follow this third scenario and fulfill these targets or not. London UK feed wheat. From mid-July to the end of September, we had a shallowly bearish channel that morphed into a shallowly descending broadening wedge pattern, which morphed again in mid-August into a bull channel, currently 300.5 to 319.90. This is highlighted in blue on my daily chart. 4 weeks ago, the market made a weekly key reversal down, a significant weekly key reversal down, that broke through the lower bull channel line and started the next major action, this time a move lower. Prices additionally broke down through the medium and long moving averages, currently 269.20 and 280.10 respectively. This despite the long moving average being in the wrong place if we compare it to where the long moving average is in other grain markets. The short medium moving average, which elsewhere had fulfilled the role of a catcher's glove holding up the market, failed to do so and dropped the ball 3 weeks ago. And, to extend the metaphor, the 50% Fibonacci line of the July 2021 to May 2022 move at 262.5, which I'd previously suggested might fulfill the role that the short medium moving average failed to do, well, that has sort of held up prices, but is now looking broken. So to quickly recap, the market has broken down through the lower bull channel line, leaving us here, as elsewhere, we've seen in other grain markets, with two avenues going forward. No doubt more will become available eventually. The first is a straightforward move down with potential targets for the break below the bull channel. Thus the primary target on the downside was already achieved in a 269 even there zone, whilst the secondary hard to reach target X1 is way down below in a 239 zone. This leads to the second potential avenue. There's a possibility for the whole of the July to day action being a possible V-bottom, but a V-bottom with an extension. These extensions have something like a bull flag within them, which I initially thought was being constructed here since mid-August. Personally, this originally looked at a very tired and sick version of even a bullish halfway hesitation. So I said 2 weeks ago and I quote, to take a big pinch of salt with that idea, but you never know, end of quote. Anyway, it looks very much as if the 50% Fibonacci line will not hold up the market. The doorway to do so is almost closed. Just the narrowest chinks of light are showing through. Hence, what has all this taught us? Well, we're on the verge here of a further move lower. And if that happens, well, the August low at 251 even is in the frame, as the market is seemingly working its way lower through the July to early September congestion. Reaching the August low will put the 50% Fibonacci line of September 2019 to May 2022 move into the frame. If that goes into the frame, so will the neckline of the small December 2021 to February 2022 reverse head and shoulders bottom, currently at 240.80. And if that goes in the frame, so will target X1. Caution. We are seemingly very, very close to the edge. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.